Hello, and welcome to another update video about gold. It was a very interesting week in the gold market. So the question is now, is the low already in, or do we get one more low? I mean, for me, that's the main question, because I'm still tracking primarily a bullish scenario below 1719. Though if we get a sustained break below 1719, I will have to start to lean overall bearish, but at the moment I don't see the need to do so, at least not yet. But it doesn't make a difference in the short term, because at the moment I'm still watching for lower potentially, or wait at least for the market to tell me that a first impulse is taking place. And if a first impulse to the upside emerges, followed by a three-wave pullback, then we can always look for something more bullish, more directly. I mean, again, I'm tracking a bullish scenario. I told you in the last video that based on this wave count here, the downside is technically full. It doesn't need to go any lower, okay? So just to give you a bit of an overview, after this wave one topped in May, the move down to that move down here was, in my opinion, an A wave. Then we had a B wave triangle, and then this C wave down. So it's a three-wave move to the downside in this overall wave 2 correction. It landed in the support area. And yeah, I mean, the B wave probably ended here with this spike on the 20th of September. So a triangle can be counted as a 5-wave move, A, B, C, D, E. And then we had a small 1-2 setup down, a 3-4, and now here the 5th wave to the downside. So this would be, let's say, the primary pathway here, and the low could be in. It could technically be in, but I need to see a break above the 50% retracement level first for a very first piece of evidence. Very first evidence that a low is in. To be honest, this would really only be the very first and early indication that a low is in. More reliable would be a break above this resistance, basically the larger 50% retracement of the entire move down. And that level is at 1896. So that would be my signal level. If we get 5 waves above 1896, then then this would be fairly clear, I would say. Then we would also break above the previous wave 4 high here. Okay, that's what I'm watching. Those are resistance levels. This is really just micro resistance. Basically, if we get into this region between 1852 and 1860, this is where, on the smaller degree, another low could be triggered. If the price breaks above it, okay, we watch for this area, 1879 to 1896. Looking at the structure, again, the low could be in, but I need to see a break at least above the micro resistance to consider something more bullish. Then I will watch, okay, do we get 5 waves up, 3 waves down, and then it can go. But I would be careful at the moment. This could still go lower. Why? Because in a different wave count, it is also possible to say, hey, we didn't have a triangle. The B wave actually ended, so where? Not there, but here. It's not a count I like. It's not a count I like, but it's a valid wave count that we say the B wave ended here. And if that's the case, or even here, and if that's the case, we have another 1-2 setup, and it is a 1-2, probably another 1-2, 3 would do a 4, 5, and then maybe another lower high and lower low. So I'm extremely careful to call a low in place here. I want to see an impulse to the upside, okay? I want to see an impulse to the upside, and then we can talk about a low in, a low being in. At the moment, I think we will at least test here the next resistance, 1852 to 1860. And if we break above that, you know what's coming next, 1896 with the previous 4th wave high. So it's too early. It's too early to indicate that a low is in, but I'm still tracking a bullish scenario. At the moment, this is definitely, though, my primary scenario with a triangle and the C wave down, but even then we could get one more low. So the micro counting is sometimes a bit tricky, okay, because you can get distortions on the lowest time frames. But I have to tell you that technically, this move to the downside is full. It doesn't need to go any lower. But in the current, with that sell-off, I would just be a bit careful to just sort of, let's say, blindly go in very aggressively. What I would like to do, or what I would find reasonable to do, is basically to wait within this first wave. Okay, this would be the first wave of the larger third wave, basically bullish. You know, we want to wait for first small 1-2 setup, 3, 4, 5, and then this wave 2 could be used to scale in to buy basically. Anyway, we're in the support area, we're in the trend reversal area. Somewhere in here, the low should be formed in this overall scenario. But you can see this could still lead to another move to the downside. It can max it out technically down to 17.19. So I just want to emphasize buying here aggressively still involves the risk that it could drop down quite a bit lower within this green support area. But maybe next week we get our first impulse to the upside. We're currently at a key inflection point for various markets, the S&P as well. S&P 500, the DXY is at a key decision point, yeah. So a lot of uncertainty in the markets, a lot of excitement in the next few weeks and months, I think, in the markets, because the markets really are at make or break points. Yeah, especially the S&P 500, the DXY as well. Yeah, it can still push a bit higher, the dollar, but yeah, it's gonna be interesting. I think a reversal is coming for the dollar. I think a reversal is coming here for gold and probably for bonds as well. I'm not tracking bonds too, you know, not regularly, but maybe that's one more thing to add. But yeah, you know, can't really add anything more. I've run out of things to say. Resistance is clear. Next support, if we go lower, is 17.98. Yeah, I'll keep you updated about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.